Good morning, everyone. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the schedule of events for the week beginning February 15th. This week, the emphasis will be on data concerning industry and inflation. There are no major central bank meetings scheduled, but speeches by ECB President Draghi and several FOMC members, as well as minutes from the FOMC, ECB, and Reserve Bank of Australia, will be scrutinized carefully. Today, the major indicator of the day is already out, China trade for January. So the big event during the European day will be ECB President Draghi's quarterly testimony to the European Parliament's Committee on Economic and Monetary Affairs. We'll be looking for any clues on what the ECB might do next. He probably can't say anything specific, so instead, he's likely to spell out what they could do in theory and what tools they have left in their toolbox. The main questions: how low can negative interest rates go, and how many more bonds can they buy? Activity may taper off later in the day as it's a holiday in the US and Canada. Data on Tuesday is likely to be poor, reflecting the slowdown in global trade and turmoil in emerging markets. UK CPI is expected to accelerate only incrementally, which probably won't change anyone's expectations for Bank of England tightening. The ZEW survey is expected to show both weaker current conditions and weaker expectations for Germany. In the U.S., the Empire State Manufacturing Index is expected to improve after the plunge in January, but still remain negative as U.S. manufacturing struggles under the strong dollar. The National Association of Home Builders Housing Market Index, however, is forecast to rise a bit, which could help sentiment. During the European day on Wednesday, UK average earnings and unemployment are expected to show that a tighter UK labour market isn't pushing up wages, which could set back expectations for Bank of England tightening and weaken the pound. Later, the focus will be on the release of the minutes from the January FOMC meeting. Everyone will want to see just how worried the committee is about the perceived weakening in the US economy and the tightening of US financial conditions. U.S. housing starts and building permits for January are expected to show a fairly healthy U.S. housing market, while U.S. industrial production is forecast to show a pretty good gain. These indicators could support the dollar if people conclude that the rise in rates in December hasn't hurt the economy. Thursday will start off with the closely watched Australian employment data, which is expected to show a good rise in employment in January, possibly a positive for the Australian dollar. During the European day, the focus will be on the minutes of the January ECB meeting as investors look for clarity on why the ECB decided they need to be vigilant and what actions they might take in March. In the U.S., the Philly Fed Manufacturing Index is expected to improve, but to remain negative, much like the Empire State Index. Friday may see an improving tone for sterling if UK retail sales accelerate as expected. Canada also announces its retail sales. U.S. and Canada both released their CPIs for January, the consumer price indices. They're both expected to show some acceleration in inflation. The jump in U.S. inflation is due more to base effects than any real increase in inflation, though, as prices are expected to fall on a month-on-month basis. The number, therefore, might not change many people's views on Fed policy, therefore not do much for the dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.